Good morning, everyone. How are you this fine Tuesday morning? I trust you managed all right yesterday without me. Looks like the market had a general uptick to it. So the market opening and kind of plodding higher right into the close, although it was probably a little bit of a lackluster kind of day. For those of you new to the trading room this morning, welcome. What you're looking at here is the diversified trading system, and what I've got on this particular monitor is the NASDAQ. Here in the top left, I have the Hawk Scalper, top right, Falcon Swing Trader, bottom left, Eagle Trend Trader, bottom right, the Raptor, and I'm also watching the Euro Dollar and July crude. Time to roll over into the next crude month. We've just had the market open up, and it looks like there's maybe a slight gap on the open. But overall, the market fairly bullish. How's that, Elmer? I didn't realize I turned my microphone out of the way. So we did have the first micro-macro cross here in the Hawk, but that's since gone into yellow bars. The only tool right now that has produced a signal is the Raptor, the Falcon right behind it now with a trend change signal. So we did get a counter trend soft edge sell signal right there out of the opening bell. Oh, and there's the follow-up signal. Now you can interpret this signal as a soft edge sell signal as well. You see the test of the extreme that came with this one is right up here. Remember, with the counter trend signal, you need two things. First, you need a trend. Then you need the market to retest the trend and fail. And that's what we have going on right now. There's the retest of the trend. Here's the failure. And here are the sellers now trying to push the market down because the buyers are unable to rally it higher. Now, a lot of times what I'll do with the first trade of the day is I will try to run it out a little bit further, especially if I'm only running a single contract. But you know what? I think I'll leave well enough alone this morning. If I get my profit target, great. I am selling into an uptrend, so this is technically a counter trend trade, and by definition, that's going to mean a lot more risk or riskiness. Our objective on these counter trend trades is the hard edge of the trading band. However, when they produce fairly close to the hard edge of the trading band or deep in the band, they will tend to overshoot. So if the structure is there, you shouldn't be shy about taking the trade just because it has already printed near the extreme part of the cloud. Note, however, that the signal, like I said, produced right here, and it probably had this very tiny little retest. That was the retest that the Raptor programming interpreted as the failure and came by with the counter trend signal. And as is often the case, when we see these counter trend signals, we will see the buyers try to recover the market. And in fact, we have come back with a hard edge bounce signal. It's advisable when the market is tossing around like this to take a second push on the entry. And all that means is I'll allow the signal to engage, and then I'll enter long above the high of this bar. Now, I'm currently short, so I'm not going to reverse on the position. But if I were looking to take this number 3 signal, I would only do so on the second push. Just to give me that little extra confidence that I'm on the right side of the trade. I wanted to see what mode we were in here in the trade forecaster, and we're currently in swing mode with scalp mode hot on the heels. Normally, when there's this transition, you can't run your stops too tight because the market's going to thrash about a little bit as it tries to change direction. And a lot of times I'll leave my stop up here at the original placement. You can see in this instance I've actually brought them in just a little. Oh, come on now. So we've got yet another counter trend signal printing. Slightly better entry than the one I ended up with, but we'll see how they sort things out from here. Come on, sellers. Let's Knock him down just one more time. Elmer, I'm not entirely sure what you're asking here. Elmer writes, Eric, when you have a second, could you show how to switch on that entry and stop of a trade that is shown in the chart? Are you talking about the P&L? If so, just click on the P&L itself. It will toggle through 4 settings. You have your price, you have your ticks, you have a percentage of your account, and then you have a blank. If that's not what you were after, just let me know. Oh, come on now. They're really disliking this 5708 region. Okay, Elmer, I got it. I think I know what you're after. All right, we've hit my break-even objective, and now we're just above the profit target. I do believe, by the way, that a retrace here to 5,700 is very, very likely. That will bring us very close to the median line. But like I said, I'll take my profit here where I have it. Okay, I think what Elmer, what you're referring to, is the text and marker, which can be a little annoying, especially if you've made a few trades. What you want to do is you'll want to go to your data series, and first I'll show you what the text and marker looks like, because some people may say, what the heck are they talking about? Okay, so here's the text and marker. It will plot after a trade is complete, and it will show you where you got in, where you got out. A great reference, I suppose, if you're reviewing your trades at the end of the day, but a little bit annoying to have on your chart. Well, I shouldn't say annoying, but I do find it distracting. So I don't like to have that on my chart. So go to your data series and pull down to the very bottom, plot executions, text and marker. You want do not plot. And that will get rid of it. All right, one for the good guys, hooray. Market looking slightly more bullish today. Sorry, did I say bullish? I meant bearish. So we've had some decent follow through on a couple of signals. The Falcon gave us the trend change signal about the same time we were getting that number 2 signal on the Raptor. And you can see we've testing now the median support line. The hawk also producing a couple of signals. We have the first micro-macro cross signal right here, but before that we had another first micro-macro cross. We had a green bar sell, and we had a 4-arrow consolidation. So the hawk giving us several opportunities to get short. The eagle, not yet. The trend trader hasn't come through just yet. Thanks for the reminder, Keith. Keith says new home sales out at the top of the hour. It does appear as though we have a little more volatility in the market than what we have been seeing. John's asking, am I still in the Raptor trade? No, sir. I did take my profit on target. I was fairly confident we would get down here to the median line around 5,700 before we saw a little bit of a reaction, and it looks like we just overshot the median line by a few ticks. Here comes that reaction. From here on the Raptor, probably going to see a cloud crossover form. That's our number one signal, providing, of course, that the market is still got a bearish slant to it. I do think it is very feasible, however. Definitely, John. John asks, can you use the support and resistance lines as profit objectives? Yes, most definitely you can. And that doesn't apply just to the median line and the primary resistance and support lines, but even the follow-up lines. It is not uncommon to see the market move at least 2 zones once it commits to a direction. So we took a little bit of a bounce here off of the primary resistance. We're at the median line. It's entirely feasible to expect the market to drift down here to the primary support. You will see that happen time and again. So let's go back to yesterday's trading. Well, you can see we easily moved 2 zones. We moved 3 zones, actually. This was pre-market. But let's say here during the session, so we get the cloud crossover signal, we buy, and let's see, does it get up? Yeah, there's zone number 1, and I don't think it saw zone number 2. No, so it took all session to travel one zone, but it was a rather broad zone. I will give it that. So your trade could have looked like, so you would have gotten in here. You could have covered below the support zone, so you can also use them that way, and your profit objective was up here. That's a $350 move per contract. That's all right. Nothing wrong with that. It's much easier if you're able to take a trade with multiple contracts as well. Because we could have taken profit on one, we could have the trade at break even, and we could try to nurse this trade out a little bit further as well. Trading singles, very, very difficult thing to do. Because you have no options. Or I shouldn't say no options, you have few options. When it comes to how you're going to manage your position. Hey, way to go, Tony. Tony says, nice to have you back. Well, thank you, Tony. Nice to be back. Tony says, I got that NASDAQ hawk on the 4-arrow consolidation with the runner, wrote it down to the median line, and the raptor to the line as a bonus. Happy day. Well done, Tony. Nice way to start the day. Peter asks, good morning, Eric. This weekend is Memorial Day in the U.S. That's right, next Monday. The markets will be closed on the 29th, it is? Yes, the 29th. Peter asks, I guess this Friday will be a nothing day as traders prepare to go away for their long weekend. Should we trade when the pros are not trading? One thing that I found about the Americans is that they are very businesslike. Friday is a work day, therefore they will be working. If it was in Canada, we probably wouldn't show up on Friday. But no, the pros will be working, at least the morning session. And I suspect that they'll probably get busy early. I think, that first hour of trading, I think we'll see them do what they need to do if they're going to do anything. And then I believe the market will get a little bit slack. I certainly don't think it'll be worth trading in the afternoon, but we'll see. Overall, the markets have been kind of dull of late, with the odd day here and there showing some a reasonable amount of volatility, but for the most part, the markets have been a little slack. So, like I said, if anything's going to happen Friday, it's going to happen early, I think. Yeah, like Tony says, Molson Friday. Yep. It's beer o'clock, boys. Let's go. John asked, you used a manual stop versus a trailing stop on the Raptor trade. Well, yes, just because I was already fairly close to my profit objective. So where did I get in? 57.08. So I shorted from here. I started up here, right? Because the thing with a counter trend trade is, yes, it's higher risk, but at least I know where to place my stop to tell me that I'm wrong. If the market reverses from here, goes back up through the highs, I can be reasonably sure I was wrong about this trade. So the market brings me in and starts to press lower for a second time. This is usually a good time to start to roll your stops. The reason is that the market will often tolerate one move against its direction, but most times it will not allow two moves against it. So if you see the market try to push twice to resume the trend, that's probably all the bears are going to tolerate. And so I brought my stop down manually to this level right here. Now at this point I could have turned on my ATR and it would have been approximately the same thing. And then as the trade progressed, well, by here I hit my break-even trigger, so there wasn't really much point in moving into an automated mode. I tend to use the auto mode more when I'm trying to run a trade out further. On these little swing type trades, especially if the market is already picking up some momentum, very often I'll just manage my stop manually. Or, if you wanted, like I said, you could have gone to an ATR or a super trend or even a swing high-low. They all would have been more or less in the same place. Pujar is asking, what is the logic behind the trade forecaster indicator? Is it dependent on average daily range? No, it is not. The trade forecaster is a very unique indicator. It works much in the way as a weatherman tries to forecast the weather. So for instance, a weatherman will look at things like barometric pressure, temperature, clouds, wind speed, humidity, and then what they'll do is they'll take all this information, and now they use computers, but in times past, they would look back in history and they would say, okay, last time these conditions presented themselves, this is what the weather was. The trade forecaster works much in the same way in that it actually looks back in the history of the chart. You need a month's worth of data, 20 trading days, for the trade forecaster to analyze, and the trade forecaster will say, all right, the last time these sets of parameters presented themselves, and those are the parameters behind the programming, this is what the market condition was. In this case, it was a scalp type environment. And it's predicting what the next environment will be. It says in about another 15, 16 minutes, we should be moving into more of a trend environment. Now, while a trend environment usually produces a more pronounced move, sometimes a trend will not move a huge distance, but rather what the trend environment tells you is that the market progression should be smooth. There should be minimal pullbacks. So what does that mean for you when you're trading? Well, that means, okay, if I'm in trend mode and I get a signal like this to buy, and we're in trend mode, I can probably get by with a tighter stop because I'm not anticipating that the market is going to make big moves against me. The progression should be relatively smooth. The pullbacks, when they occur, should be minor. I may also choose to extend my profit objective, thinking that perhaps the market is going to reach a little bit further. Scalp mode, on the other hand, is just the opposite. When the market is in scalp mode, we anticipate less follow-through. We anticipate greater swings, more volatility on those swings. So what does that mean for you as a trader? Well, that means when I get a signal, I may look at a second push opportunity. I'll definitely run a deeper stop. I'll probably only take a single contract. I may even run a tighter profit objective than the one that I normally do because I'm expecting less follow through on the signal. I'll probably be all in, all out on a trade. So the trade forecaster helps you try to decide what your best strategy given the signal will be. Swing mode is going to be somewhere in between. You're going to see a little bit more follow through on the signals, but we may see a little bit more volatility on the pullbacks as well. So when you're in swing mode, it'll be your choice. Am I going to try to run out the signal? Am I going to just take profit on target? Maybe I'll split the trade. You know, if I can afford more than one contract, maybe I'll take profit target on half and try to run the other half out. I'll probably still need to run a slightly deeper stop in swing mode because, of course, the pullbacks may be more significant. The Day Ranger is also a very interesting little tool. It gives you your average daily range, yesterday's range, and then your 5, 10, and 30-day ranges. So how is that helpful? Well, right now we can see that according to the the Day Ranger, the market seems to be expanding. Volatility seems to be picking up. Our 30-day range about 143 ticks, our 10-day range 196, our 5-day range 275. So volatility definitely coming into the market. So how would I interpret that? Well, let's say I want to set a profit target at, I want to try to capture 20% of the average 10-day range. Okay, so the average range for the last 10 days around 200 ticks, 20% would be a 40-tick target. So when I get my signal, now I'm going to try to run a 40-tick target and try to, so let's say I try this green bar sell / 4 arrow consolidation. There's my 40-tick target. That's my objective. Let's say I want to run, allow 15% of the average daily range as a stop loss, because as the volatility increases, I'm going to want a wider stop. As volatility decreases, I can probably get by with a narrower stop. So the average range, 200 ticks. If I'm going to run a 15% stop, then I'll have a 30-tick stop loss. And that should be enough to keep me out of harm's way. Now we do have the fixed tick strategy right here, so you could certainly run a 30-tick stop, let's say off of the high, and that's what your stop is going to look like. So let's say you chose to short this macro pullback signal right here. There's your 30-tick stop. If you decide, like I said, that 15% is an adequate stop on the day, you may choose to only run 10% of the daily range. The other thing about the Day Ranger is that currently we've only put in 97 ticks. Yesterday was 228, and like I said, we can probably expect at least 150 to 200 ticks on the day. That would fall well within the average. So that tells me that the market's not done yet. If this said 197 instead of 97, well then I might not anticipate too much of a move on the remainder of the day. Hi, Andres. Andres asked, how was your Monday? My Monday was very Monday-ish. Not as bad as some Mondays. All right, you Raptor traders. What signal am I anticipating? What do we think is going to be printing here? Nobody? Nobody even gonna try? All right, well, we'll just put it back on the shelf then. Oh, okay, Pujar, you get points for trying. Um, Pujar is saying a number 2 signal. No, not quite, although I can see where your logic is coming from. We might you might be looking at this as the downtrend and this as the retest. And then that would be our number 2 signal. I can see that. No, I'm looking for a trend signal, a cloud crossover. So the clouds have crossed, and the market is now moving into the clouds. I'm going to look for the clouds to support the new direction and come out with a with trend signal. The market does seem to be still slightly bearish in flavor. We have had a trade pay off to the short side. Therefore, I'm going to favor the sellers over the buyers at the moment. Oh, maybe not. Oh, way to go, Keith. Keith got it right. The cloud crossover signal. Getting a first micro macro cross higher and a trend change signal here in the Falcon as well. The buyers are trying to get their licks in. And truth be told, it is usually easier to buy the stock market than it is to short it. Okay, now if we get a buy signal, it might be a little bit more convincing to see that counter trend signal, that soft edge sell, the number 2, because this is a definite test of the extreme. This is the sellers trying to recover the market to the short side. John is asking, would the cloud cross be a buy? No, it is a short. We've gone through the clouds. The clouds have changed direction. You see how the cloud was bullish here? Now they're stacked the opposite direction. When that happens, very often the market will retrace into the cloud before the cloud pushes it out, kind of confirms that direction. See if I go back here to the last cloud crossover. Oh, okay, this is not as well defined. The market made a very strong move up just pre-market and only gave you a tiny little retest. Let's see if we'll go back here to the other cloud crossover. Oh, here we go. This one's a little bit better. Let me enlarge that. Okay, so we have clouds that are stacked in a bullish fashion. The market flips the clouds over. There's the retrace into the cloud, and there we come out with the cloud crossover signal. The number 1 signal tends to develop at the beginning of a trend. As the market is trying to put in a new trend, the cloud crossover signal will develop. The number 2 signal is a counter trend signal, which will obviously develop near the end of the trend. And then your number 3 signal is a continuation signal, and it will develop once a trend is already in play. So when those clouds cross, you'll want to look for the market to pull back and then for the clouds to support that new direction. The way the programming works, the clouds need to cross completely, but you know, if you know what to look for, if you're prepared for that little pullback as the clouds cross, sometimes you can pick it up early as well. There is an early cloud crossover, but the Raptor itself, the programming looks for the proper cloud crossover. And we discussed that the other day regarding these secondary signals. Sometimes these secondary signals allow you to get into a trade a little bit earlier. These would be signals that do not have the prompts associated with them. However, you still need to look at the overall market context. Right? We still want the context to be right. Well, this is interesting. We'll have a more defined signal on our other tools, but if the market trades up, we could be in for a little bit of a rally. We have a wishy-washy rule of 3 here in the Eagle. We do have a late filter entry here in the Falcon, so a few things making the market definitely look a little bit more bullish here at the moment. Not to mention that the buyers just consistently pressing against the sellers and the sellers not pushing back. Yeah, that's true too, John. John's saying we're getting a little bit of a bounce off of the median line, and you're absolutely correct. The median line kind of confirming that it's holding the market up. So, yeah, good eye on that, John. It might result in a little bit more of an uptick here. I would not be surprised. Personally, I'm still favoring the shorts, the bears, and the reason for that is I've had a signal pay off to the short side. So when it seems like the market is paying off one direction, I will try to stay with that direction until proven otherwise. Kind of like that slot machine in Vegas. Once it pays you a little bit, you just keep plugging that thing. Hopefully, unlike the slot machine in Vegas, it doesn't end up taking all your money. Pujar is asking about the Raptor filter here. He's asked, is that similar to the trend heat map, or is there more to it? The Raptor filter is actually the Eagle Trend Trader. The whole Eagle Trend Trader is programmed into the Raptor filter right here. So as far as because the Raptor is a hybrid of the other three birds, the Hawk components have to do with the bars, color, as well as part signal generation. The Falcon also part bar, part signal generation. The Eagle is the cloud, or in this case clouds, and the filter. So that's how the three birds have been put together to be the Raptor. The idea behind the filter here is similar to the way we use it in the Eagle, namely when we start to see it break up and we start to see shifts in momentum, we'll trade accordingly. See if I can find you a good example. The market's been in an uptrend for so long. All right, well, here we've had a little bit of a bearish slant, and then all of a sudden we get a bullish block. And you can see the seller's reply, not nearly as strong as it was before. And then the buyers come back. Sellers gave it a good push. The buyers come back, and now you can see the sellers starting to lose their grip. They can't pull it off any longer. And then we got this huge bullish streak. So now we're seeing that fight again. So big buying streak, little sell. Buyers try to buy it back, sellers knock them down. Buyers try to come back, sellers knock them down. Buyers are trying to bring it back. We'll see if the sellers knock them down. Now, the late filter entry signal here is still a valid signal, and there might be some of you taking it and wondering, Eric, why are you not taking it? Well, like I said, I'm slightly more bearish because that seems to be the trend to me this morning. However, if you are in this trade, it is a valid trade. You do know where to cover it. If you are going to cover the trade a little bit tighter, try not to overextend yourself. Just go in with a single. If the trade works, great. If it doesn't, well, you haven't lost a whole lot on it. I can see a pullback here to the primary resistance line. Sure, why not? So I think you'll reach your profit objective if you are in that trade. And of course, if they falter here one more time, well, that'll be a good excuse to get your your stops up tighter if you haven't done so already. Poojar, I can tell you have a programming slant from your questions here. Poojar is asking, is the Falcon programmed into the Raptor? Well, the Falcon is key to signal generation and bar generation. So it's borrowed from the Falcon programming to help with the signal generation as well as how the bars print. Very often you will see Raptor and Falcon signals coincide. See, here was the late filter entry signal on the Falcon. Here is the comparable signal on the Raptor, even though on the Raptor it does not qualify as one of our high probability signals. David having a little problem with the audio. Anybody else having audio problems? Yeah, okay. Thanks, Aspen. I'll let David know. All right, Aspen asking, Eric, on today's NASDAQ, there are so many not so high probability longs. I got that, but when will the Raptor display a number one? That I cannot figure out yet. Okay, the number one signal, Aspen, is the cloud crossover signal. So as soon as the clouds begin to cross, I am going to anticipate a cloud crossover signal. You see how the clouds are crossed here? How they've turned bearish versus how they were bullish here? The hard edges have not crossed yet, and typically the Raptor will wait for the hard edge to cross. So I know I've got a little bit of time, but the cloud crossover signal demands two things from me. Or I demand two things from it, I forget. Number one is that the clouds cross. So check that. We've got the clouds crossed in a bearish fashion. Number two, the market needs to pull back. It needs to pull back. Usually it will pull back into the cloud fairly deep, as a matter of fact. Most times, not always. And from there, I need to see the cloud support the new direction. It's essentially a test of the extreme again, but on a smaller scale. So once I have the clouds cross, I'm anticipating a cloud crossover. Once I see the pullback, well, now I'm starting to get a lot more interested. And the market's pulling back, pulling back. Note the cloud is still bearish. And now we're dead neutral. The cloud, if you're going to be ultra particular, the cloud has flipped to be more bullish, but you have to give the programming a little bit of leeway. So if it comes down now, I'll still have my number one cloud crossover signal. Yeah, Aspen, you got it. You got it. So Aspen says, okay, the cloud, I got it. This is what I have to get. So after the crossover, next pull up and we will have a number one, correct? Yes. So what I'm looking for now is I'm looking for the market to trade down. So I need to see a couple bars trade down and produce a sell signal, obviously, and that will be my number one cloud crossover signal. Now, whether or not the Raptor is going to interpret it, that I can't tell you at this point, because the cloud is dead neutral here at the moment. It may have fudged the Raptor programming. You know, it may not, the programming itself, because of course computers, everything is black and white, there is no gray. And as I said, in actual fact, the cloud has just slipped above the hard edge right here. You probably can't see it. You'll see it on your own computer. And that might be enough to spoil the setup for the signal prompt, but it is not enough to spoil the cloud crossover signal itself. So before we had the signal prompts, I would still be all over buying this as a cloud crossover. Or, pardon me, I meant selling it. All right, David's having a little bit of an issue here with his clouds. 1 second. And we will try to resolve that. Yeah, okay, David, your clouds are definitely a little bit more choppy. So here's the issue. David's clouds are looking like this, and usually we don't want that. We want the clouds to be a little bit smoother. So are you looking at the NASDAQ, David? And if so, what is your brick size? And also you'll want to go into the Raptor, and the defaults are 12 and 8. I want to make sure that those didn't get changed by mistake. Oh, it's the 30-year bond. Yes, David, the 30-year bond is a very unique market in that $31 a tick, it does tend to mess things up. So you're either going to have to go to the 446 setting, or you can speed it up even more and go to 244. So bear with me here a moment, and I will show you what I'm talking about as soon as I can find my chart. All right, so just waiting for that signal now. We're going to get a green bar sell here on the Eagle. That tends to be a fairly good signal for us. Just trying to get a stop strategy in play here in case I need to hit my buy or sell market buttons. All right then, here is the Raptor on the 30-year bond. And you can see that these are the faster settings already. This is the 446, but look at the daybreak lines. Like, what was this, Thursday or Wednesday? The 18th. That was last Thursday. That looks like it was one of the few days all week where there was actually adequate range that you could take a couple trades. So this was yesterday's session. You wouldn't have got any signals. So when your bars are printing this way, you need to make some adjustments to your system. Just want to make sure I'm not missing that signal. All right. So if the 446 setting isn't working for you, you can try the 244. Now that's kind of unique to the bond market. I think it's the only market I've ever used a 244 on. So if you go to your data series, you want to change your brick size down to 2 ticks. Okay, all of a sudden we've opened things up a lot, but you can see the bands are so broad, it's not really telling us anything. So we need to adjust the Raptor as well. So go into your indicators and find your Raptor. Then pull down here, and you're going to change your sizes. So we're going to have a 4, a 2, and a 2. And we'll see if that doesn't smooth things out for us a little. And voila, look at that. So when you have a chart that looks normal, and I'm using air quotes, normal, then you'll know that your settings are probably going to be correct. Then what you want to do is you want to go follow up on some of the signals. Not to say that the signals, always work out, because they will never always work out. But just see what kind of follow through you have on the signals, how long you would have had to stay with the signal. Here's a cloud crossover signal, and it looked like it had some decent follow through. Here's a couple of continuation signals and trend change signals that didn't go anywhere. But remember, you got to look at the context that these are printing in also, right? So there was a sideways market, so we expect the signals to flip-flop a little bit. And it's looking like it's printing reasonably well. Here's another cloud crossover. With the bond market at $31 a tick, I have a tendency to get in and out. I don't usually hang on for a long time in the bond market. Well, you really don't need to. Now, if it seems like the signals are printing too frequently, well, then you can make adjustments to your settings as well. Maybe instead of 244, you want to enlarge one of the clouds. Maybe go 246. No, I think that 6 brick cloud is going to mess things up. Yeah. Yeah, it looks like 244 is going to be the setting for the bond market. All right, David? So there you go. If you're trading bonds, you really have to. You're really going to have to dial it down. And here's my cloud crossover signal. Let's see if I get a second push opportunity on that one. Are they going to give it to me? Come on, get up there a little. All right, well, we'll try to do it like this then. Obviously, I'm in a little bit later than I would have liked, but if it's going to continue, they should be all right. All right, well, we're waiting for that. David has a question. Could you share your favorite go-to quick key combos you use the most? For example, how to quickly, without going to the menu, zoom in and out of a chart, scale charts both horizontally, vertically. Thanks. Well, the quick keys I use the most are obviously the drawing tools. F2 is just your line. F3 is array. Those are kind of the ones I use the most. And you can learn all these from your little drawing tool up here. As far as sizing the chart, well, left clicking and pulling on the price axis will shrink your chart. Your little format button up here will automatically resize your chart again. To move through the chart, my mouse has a scroll wheel, so if I scroll down, it will go back through the history of the chart. This solid arrow will bring me back to my current price. If I hit the control key and hold it and left click on the price axis, I can move my chart up and down without it resizing. And then of course there's the auto format that will get everything back into place. So that's about it as far as chart sizing goes, or making changes to the chart. Okay, John's asking, of the three Raptor signals, would you say the number one signal is the highest probability trade since it's with trend trade? Well, it's only with trend because it's catching an emerging trend. All three are high probability signals if the context is right. This is something that, and I realize you're a new trader, and please try not to be frustrated with this, but traders have the very bad habit of this is their focus. I have even seen traders build charts so that all they see are like the last 8 bars on their screen. You cannot trade just by concentrating on the last half dozen bars. You have to, and I do mean have to, take everything into consideration when you're looking at a signal. You have to look at the overall context. Now, the prompts are here to help. You know, especially when you're starting out, you may not have recognized this as a hard edge bounce. So the prompt comes along and says, hey, psst, John, we've got a hard edge bounce forming. Oh, okay, let me get on that. But you still need to take the context into account. Same thing here with the trend change signal. Sure, it's a soft edge sell signal. According to the programming, all the parameters are met. But does it look like a soft edge sell? What are the requirements for a counter trend trade? Well, before we can have counter trend, we first need to have something resembling a trend, don't we? And before a trend can falter or change direction or go counter trend, we need some sort of evidence that the trend can no longer continue. And that would be this right here, the market trying to resume the trend, and then it cannot. It's starting to go the other direction. There's your counter trend signal. But if the market is moving sideways, as we saw back here, and I'm producing, you know, counter trend signals and trend continuation signals, and there is no trend to go counter or continue, well, I need to weigh that, don't I? I need to look at this and say, is that really a trend continuation signal? Is that a good signal? Sure, it's a signal, but maybe I'll take a second push entry on it. Maybe I'll let the signal engage. I'll see how serious it really is. I'll only take one contract instead of loading up on it. If it works, great. If it doesn't work, well, okay then. I've lost a small amount, but I've given the trade a chance. I'll probably be quick with my stops. You know, if the market tries again to resume the trend, I'm probably going to be really quick with my stops. And if it reverses and stops me out, okay, so be it. So I took a $50, $60 hit here. It's not the end of the world, right? So is the number one signal a better signal than the number two or the number three signal? No, not in terms of probability, but we do need to judge it in the overall context. So John's asking, so we need the Raptor signal plus context. Well, yes, you can, to start, you can focus just on the signal itself. However, you need to know why the signal is printing. This is what Aspen was asking. Why would the number one signal print? How can I anticipate the number one signal will print? Well, because it's a cloud crossover signal. And as the name implies, the clouds need to cross. That's component number one. Component number two, there's going to be a pullback. Component number three, the market's going to try to resume the trend. Will it be successful? Well, I certainly hope so, but there's a chance it might fail, which is why we rely on capping our risk at an amount that isn't going to ruin us. The signal that probably requires the most context is the counter trend signal, because it's also probably, if I had to rate them, the number 2 counter trend signal is going to be the higher risk signal, because it is counter trend. You are trying to move against the current market trend. Right? When this signal printed, or these signals printed, there was a pretty decent uptrend underway. So before I get too serious about shorting an uptrend, I want to make sure that the buyers cannot recover the uptrend. They tried to recover it there. They tried to a lesser degree there. They tried here. And all 3 times, or 4 times if you want to count that, they could not resume the uptrend. And all of a sudden I'm printing a counter trend signal to sell. What do you think? Might that be a signal to try? It may not work out. It is counter trend, but I've just seen the market try 4 times to the buyers to recover the uptrend, and each time the sellers knock them down. They knock them down here, 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 and here they are knocking them down yet again. So yeah, I'll give it a go. And I don't know where the market will go next. I know sometimes I talk like I do, but nobody knows. I don't know the market is going to go down. It could very well go up from here. But I've got my protective stop in play. I've got my profit objective. I have a good reason to sell. Now, I actually wanted to short here, so I'm a little bit choked. But I have a good reason to sell this market. So, you know, if I see the sellers, hopefully I'll see the sellers print another bar lower here, and ideally I'll get 2 bars. Well, then I'm definitely bringing my stops down here. Right? Why would I do that? Well, if the sellers print 2 more bars down, or at least 1 more bar down, and then if they cannot continue to my profit target, well, what's going to happen? The market's going to reverse, and it's very likely going to keep on reversing until it hits my stop loss. So I would rather take an earlier stop out. Now at this point, it's not that defined yet. And we are producing a counter trend signal, which, you know, given the yellow bars that are cropping up, what is our trade forecaster telling us? Oh, we are actually in trend mode, so hopefully this will continue a little bit lower. But the market is struggling for some direction here at the moment. And I'll just continue to hold my stops. I think I'll give them a couple more ticks, go above that little swing high. That's still within my risk parameters. And my stop now is just my safety net. It's my worst case scenario. If the trade comes undone, well, that's the most I can lose. David asks, for the hours of the day when the trading room is not available, does anyone here have any recommendations on how to reach live Ninja support? They're very good at responding to email. They're very quick with email, or at least the times I've emailed them. They also have toll-free phone numbers that you can call. And you can get all that off of their webpage. Pujar is asking, what should be the ideal ratio for the two clouds in the Raptor system? I see you're using 8 and 12 for the NASDAQ, so is it a 1 to 1.5 to generalize for all instruments? Sure, that's a pretty good rule of thumb. If you keep that 1 to 1.5 ratio, you'll probably get clouds that are printing the way they should. It's very rare that we need to make any adjustments to the clouds. Now, of course, the new Raptor one of the features is that it is much more tweakable. So you can make your own changes. The Hawk, the Falcon, and the Eagle, the programming is locked. You cannot make any changes to those. The Raptor, however, you can make some changes. You can adjust brick sizes, you can play with the bands, you can adjust the bars to produce the signals faster or slower. So the Raptor does give you that ability. However, I have found, and this is only my own personal experience, you may find better settings, but for the vast majority of the markets, certainly those trading at $10 a tick or less, the default settings work just fine. The exception, the popular exception, is the E-mini S&P at $12.50 a tick. It does not respond all that well to the default settings, which is why we have the alternate settings, the faster settings for the E-mini, and those would be the 446. The bonds, I know, are a popular market as well, but as you've seen, for the bonds, even the 446 is not fast enough. You need to dial it down even more. But it has more to do with the tick value than anything else. You're going to find those high tick value markets are probably going to require you to adjust the brick size at least a little bit. But when in doubt, start with the defaults. All right, Tony's asking me to run a poll here. Let me see if I can do it. He's curious how many traders took advantage of the indicator warehouse top step trader offer. All right, if you choose to answer this question, you don't need to worry, it is all anonymous. And we'll only flip to the screen here for a moment, and then we'll get back to the Okay, just a few more seconds, and then I'll close the poll. It looks like so far, though, most have not. Why not? All right, I'm going to close that up. Come on down. Yeah, I'm getting a few people here saying they weren't aware of the offer. Oh, well, thank you, Ryman. That's a nice compliment. Ryman says, I did not like it at all. I just learned to trade my way, that I learned from things from you, Eric. Well, thank you. That's a very nice thing to say. Yeah, trading is a very individual activity, and Top Step, their requirements are severe, but hey, it's their money that you're trading, so I guess they're allowed to call the shots. Things getting very quiet. Market drifting sideways. David, in regards to learning more about Ninja as well, Ninja has some great YouTube videos that they have produced also. So if you're curious about how to use certain features on Ninja, then you can always just type that into a YouTube search. Yeah, Tony says couldn't handle the drawdown requirements. That was my stumbling block with Top Step as well. I didn't think that was fair because what they're doing with their requirements is they're essentially forcing you to set up a trade that's going to look like this. You know, we're going to sell here, and the stops are going to go right there. And that's pretty much the type of trading that you're going to end up doing. Or you're going to try doing limit trades where you may throw in a limit order to sell up here as the market comes back to test the trend line, and maybe throw the stop up there so you have like $40, $50 in play. But like I said, they're looking to throw 100 grand your way to trade their money. they can call the shots. So we're getting quite a bit of sideways trading here. Yes, I saw that too. Tony says they want a few ticks and very restricted risk, kind of e-mini trades. Yeah, I would agree. They do have a little bit of a scalp type mentality. But as we've seen, the scalp trades do have a higher probability of success. The tighter your profit objective, the more likely the trade will work out. So even entering late, if my profit target were down here, only $50, 2.5 ticks away, I would have met that profit target already. Or not 2.5 ticks, 2.5 points. Good question, Peter. And Peter reminds me I was going to show you how to do this, how to add to positions. But Peter asked, Eric, do you ever add to your position when the market goes quiet like it is now? No, not usually. Sorry, I had a little bit of a coughing fit there. No, not usually. Now, it's probably because I have a tendency to take my max position at the outset. But if the market was already profitable, then yeah, that would be a good time to add to it. And this is kind of the last chance now for the sellers. I got one bar down. Wasn't much though, no follow through on it. I will wait, give them one more chance, but it's not looking so promising right now. We did get a little bit of a higher swing relative to this one. The sellers got to get busy here. Well, we're kind of hanging on to this one. We'll stay with it for a few minutes more. If we can get to see this bar finish on the lows, then there's a good chance we're going to see at least a little bit of follow through as the sellers step up here one more time. Come on. John's asking, how many trades do you usually handle at one time? Well, lately, I've only been doing one trade at a time. But there have been times where I've had as many as 4 trades in play at once. Of course, the market needs to cooperate. It's hard to put on 4 trades if there's not anything happening. And it does depend, of course, on your account size as well. You don't want to over leverage. That's a no-no. That's always a no-no. Well, the buyers are being very stubborn, I have to say. We may have to hold on to this trade for a little while yet, unless, of course, the buyers run it up through the swing high. Yeah, John says, I'm just trying to determine what's normal. Well, I think, when it comes to classifying what's normal, you always need to bear in mind that it's your job as a trader to take what the market is giving, right? You cannot impose your will on the market, unfortunately. But if the market's not in a giving mood, then obviously you're not going to be taking trades that often. Oh, I see the euro dollar rallying, which might spark the Nasdaq here to rally as well. Sometimes they have a tendency to move together, those two. All right, gang, they're just kind of taking their time here. So my objective for this is to try to get it down at least here to a break-even type situation before it tags me out. And I'll probably need to nurse that along a little bit longer. In the meantime, if you are going to trade the rest of the day, It does seem to be a little bit in sideways mode now, even though we did start off with a rather nice bear move to the downside. So right now, I think the sellers still have the nod from me, but if they don't get something together here soon, then then they won't. Then it could be anybody's game. All right, boys and girls, we'll catch you again tomorrow morning. Bye for now.